Welcome back everybody to Cryptocurrency Weekly, where I keep you up to date on what's happening in the cryptocurrency space. From technology updates to the latest news, we have you covered. So if that's something that interests you, please subscribe to the channel and give the video a thumbs up, and please comment your thoughts below. This channel is for information purposes only and is not investment advice, nor is it buy or sell signals. This is my opinion and that is all. So with that out of the way, let's get right into it.
First up, Bitcoin price moves towards 40k as on-chain and technical analysis favors bulls. Bitcoin price is still 38% away from its all-time high, but a handful of technical indicators suggest bulls are gathering strength. Bitcoin price saw a bullish turn of events on June 13th as the price broke out to 39,252, but many analysts are still on the fence when it comes to determining whether the digital asset is ready to continue its uptrend. To date, the crypto market remains on the edge and is 2 months removed from Bitcoin's all-time high near 65,000. A market analyst from Delphi Digital identified a major head and shoulders pattern that could spell more short-term pain if Bitcoin dives below 30,000. With that in mind, now is a good time to review some key data points to gain a greater perspective of where Bitcoin price could go next. Short-term holders suffer losses, so a 50% decrease in price over the past 2 months may seem extreme to those unfamiliar with the volatility of the cryptocurrency market, but it comes as no surprise to the long-term holders who have seen multiple drawdowns of an even larger magnitude over the last decade. So this tends to happen quite a bit if people are new to the cryptocurrency market. If you're experiencing a 50% decline in any asset class that you're in, especially crypto, these moves happen quite frequently, so it's not par the course for them like the long-term hodlers like it is for the long-term holders, okay? So this can tend to shake out the weak and newer hands. So as seen in the chart above, a drawdown of 70% or greater is not uncommon for Bitcoin, especially following a significant run-up in price, hitting that the possibility for further pain is still a threat as bulls battle bears in the mid $30,000 range. The rapidly falling prices set new and old Bitcoin holders running for the sidelines, resulting in traders selling at a loss. Now, if you're trading, my suggestion is to only do it with a small portion of your portfolio. I don't really trade that often at all. I'm a long-term buyer of cryptocurrency, and I suggest you do the same and be prepared to ride out these sort of huge swings in the market. That's why it's important that you don't overextend yourself, so you're not put in a situation where you have to sell at a loss, okay? Because a lot of people selling at a loss is either one, they don't understand the technology, or two, they've overextended themselves, okay? So if you avoid those two problems, you're going to be a much better investor for it, okay? Next up, Canadian Bitcoin ETF adds to its holdings despite steep market correction. So the Purpose Bitcoin Exchange Traded Fund has been reaccumulating Bitcoin since mid-May, a sign that investors are keen to buy the dip. So demand for Bitcoin amongst Canadian investors has not wavered amid the latest price correction, offering further evidence that market participants are capitalizing on heavily discounted prices. The Purpose Bitcoin ETF, which launched in February, has now accumulated over 19,000 Bitcoin as of June 13th, according to Bybit data. The ETF has added 284 Bitcoin over the past 7 days, nearly 2,000 Bitcoin since May 15th. A massive breakdown in price has not deterred Canadian investors from seeking exposure to Bitcoin. In fact, the ETF added to its holdings during the May 19th flash crash that saw Bitcoin wick down below 30,000 before quickly recovering. At a current BTC price of around 36,000, the Purpose Bitcoin ETF has a value of over 709 million. Assets swelled to over 1.3 billion in less than 2 months of operation. According to technician Byzantine General, inflows into the Purpose ETF suggest Canadians aren't concerned about Bitcoin short-term price action. As you can see here, if you don't follow Byzantine General, I suggest you do. He's got some great content on Twitter. So on a shorter timescale, Bitcoin's price action has been a source of concern for the bulls. The flagship cryptocurrency has been languishing below 40,000 for the past month, with each attempt to reclaim that level being firmly rejected. A confluence of technical breakdowns, weakening sentiment, and negative headlines have contributed to the bearish price action. Now, as we can see, everyone, Bitcoin has been in this downtrend for, a good month now, after consolidating at, between 50 to 60, $45,000 to $60,000 for quite a few months. So I'm of the opinion that this consolidation, as well as this, drawdown here, is going to offer great price support and good market structure for our next bear market. I expect us to sort of bottom out at around these prices. Of course, you could be wrong. I could be wrong. I'm wrong all the time. So don't take this as, financial advice, but you can see we're in this downtrend here and we've just had a breakout. So it'll be interesting to see if we can hold this trend line here as support, because this might be the worst of it, okay? But as you can see with Canadian Bitcoin ETFs, all right, smart people are buying cryptocurrency when it's, in this free fall position, all right, which is the smart thing to do. Is the first rule of investing is to buy low and sell high. That's the number one rule of investing. So don't let your emotions dictate that you do anything other than that. Next up, big news for Bitcoin. So on a fundamental level, nothing has been this bullish for Bitcoin. Fundamentally, Bitcoin has never been in a stronger position. So if you just disregard the price and look at everything from a fundamental level, we have never been more bullish on a technical aspect of Bitcoin before, okay? Maybe the price is a bit lower than what it has been, but this is as bullish as I've ever been on Bitcoin. Bitcoin's Taproot upgrade gets its 90% mandate. Taproot opens us new possibilities for privacy, multi-signature wallets, and security, as well as scaling. The most significant improvement to Bitcoin's protocol in years now has enough mining support to lock in activation. According to the parameters set forward by Speedy Trial, if at least 90% of the blocks mined in any of the designated 2-week difficulty periods signal their support for the upgrade, then the activation process can begin. To be more precise, 1,815 out of 2,016 blocks mined within a period have to include a little piece of encoded information that indicates that the miner who minted that block is in favor of the upgrade. During the second difficulty period at block 687,284, the benchmark was met. By the time that the difficulty period ended on Sunday, it is likely that Taproot will have locked in with over 99% of block signaling decisively in its favor, okay? Now, what is Taproot, okay? Aaron Van Wildrum gives a great explanation of this, okay? So, for years now, Bitcoin developers have been wanting to implement Shona signatures on the Bitcoin protocol. Among other things, Shona signatures would enable a new type of smart contract, sometimes referred to as scriptless scripts. So this is all about what Taproot is going to achieve on the Bitcoin protocol. Meanwhile, Bitcoin developers were also thinking about a trick called MAST, Merkleized Abstract Syntax Trees, which would make smart contracts on Bitcoin more compact. Bitcoin Core contributor Gregory Maxwell then figured out how to combine Shona and MAST in a clever way to not only make smart contracts more compact, but in many cases also indistinguishable from regular transactions, benefiting privacy. And this is where Taproot enters into the equation. After years of development, the Taproot code was ready to be activated. This marked the start of a new discussion. How should the upgrade be deployed on the Bitcoin network as safely as possible? Interestingly, some miners also took the initiative to get Taproot in the Bitcoin protocol, collecting positive feedback from a range of mining pools. Still, there were roughly two camps in the Bitcoin activation debate that for a while seemed unable to reach consensus on the best method, lot equals false or lot equals true. This apparent deadlock was eventually broken when Bitcoin Core contributor Russell O'Connor proposed an activation method called Speedy Trial. Today's Bitcoin miners locked in Taproot using mining signaling as defining in Speedy Trial. Bitcoin is upgrading. Congratulations to everyone. As a neat example of something new that could soon benefit from the Taproot upgrade, several Bitcoin developers have been speculating about a concept known as payment pools. So this is really bullish news. This is the most significant upgrade to Bitcoin in quite a while, guys. So extremely bullish news there. Next up, 12% of consumers, a projected 30 million, currently own one or more cryptocurrencies. So 4.5%, 11.5 million people have owned them in the past, and 17 million non-owners may acquire cryptocurrency for making purchases in the near future. So we've got these figures here as to who has owned and who hasn't owned amongst different generations. So you can see most of the millennials and most of the bridge millennials hold the most of the cryptocurrency relative to their generation. Okay, consumers' comfort levels within making purchases using cryptocurrencies is high among current owners, but is noticeably strong with those who have never owned cryptocurrency. Next up, banks won't exist in 10 years unless they change their business model. Crypto was invented by people to remove people from the equation. The issue plaguing the financial world, whether centralized finance, insurance, lending, or other assets, all come back to human error. For instance, why can't a dispensary put in cash in the bank because of bad human judgment? These rules and regulations make zero practical sense. The blockchain ecosystem takes the human element out of the equation. Now the technology governs because Satoshi Nakamoto was smart enough to realize that someone has to remove people from the decision process. In decentralized finance, I don't need approval from a bank if I want to borrow or lend money. So that's right. Cryptocurrency is a disintermediary technology. It removes the middle layer from a lot of the traditional finance system. And a lot of people's power is at risk. They're at risk of losing that power. So when you see a lot of FUD or a central bank talking terribly about Bitcoin, it makes sense why they would do that if this is a threat to the current power that they have over the money. Okay, so I tend to agree with this author. Banks are going to zero in the long term. They might exist for a while longer yet, but in the long term, traditional banks as we have them today will not exist. Next up, US inflation hits highest rate since 2008, outlining case for Bitcoin. With inflation in the US hitting its highest mark since the 2008 financial crisis, Bitcoin is serving as a critical lifeline. The CPI, the Consumer Price Index, a measure of the price of custom goods and services, increased by an annual rate of 5% last month, hitting its highest mark since August 2008, according to the US Bureau of Labor Statistics. Now, if they are admitting that inflation is 5% within the CPI, you can only imagine how high it actually is, because the CPI is heavily manipulated. Okay, so they'll quote us what the CPI is, and then they'll tell us it using an unofficial number. So as money printing and federal economic stimulus measures continue in the wake of the COVID-19 pandemic, this measure indicates that the US dollar inflation is at its highest mark since the Great Recession, leading to palpable concern from investors. Fears over rising prices in the US have gripped markets, with investors fearing that pent-up demand and supply chain bottlenecks will create inflationary pressure, forcing central banks at the Federal Reserve to slow their stimulus program, as The Guardian had reported. Core inflation, which strips out volatile items such as food and energy, leaped to the highest level since 1992. It rose 3.8% year on year, up from 3% in April. Bitcoin, which was introduced with a direct overtures to the Great Recession, is designed to solve many of the problems currently rearing their heads in the legacy financial system. So yes, the Bitcoin is a revolution. It isn't going away. I agree. The Bitcoin supply is predetermined, released in a programmed way, and free from manipulation from third parties. It's a completely trustless system. As such, it cannot inflate as the dollar is currently. Concerns about inflation drive many people to invest in Bitcoin as a way to better protect their wealth. This current economic trend appears to be setting the stage for another crisis of Great Recession proportions, something that Bitcoiners have felt coming for a long time. So inflation doesn't just drive people to invest in Bitcoin, guys. It drives people to invest in precious metals and stocks as well. Next up, the Federal Reserve balance sheet tops $8 trillion for the first time. Guys, this is absolutely staggering, okay? The amount of debt that is within the system now, and leverage and the low interest rates, indicates the economies all around the world are very weak right now, okay? The US Central Bank will continue buying treasury and mortgage bonds to support the economy. The Federal Reserve balance sheet has exceeded $8 trillion for the first time following extensive measures the US Central Bank took last year to contain the economic damage from the coronavirus. The Fed's balance sheet has nearly doubled since March 2020, when the pandemic erupted in the US, based on weekly statistics released Thursday by the US Central Bank. The central bank announced last week it would start selling corporate bonds and exchange-traded bonds it bought during the pandemic through an emergency lending vehicle. But the Fed's Monetary Policy Committee has pledged to keep buying US Treasury bonds and mortgage bonds at a pace of about $120 billion a month until substantial further progress has been made towards the committee's maximum employment and price stability goods. Cryptocurrency investors have been monitoring if and when the Fed will start tapering its easy monetary policy. So guys, when you look at the macro environment within the economy today, okay, I don't think we have anything to worry about at all within the cryptocurrency space, with Bitcoin specifically, okay? So the macro environment, this is what we know, okay? We know that one, federal banks are printing more money than ever before, which is devaluing the dollar and decreasing your purchasing power, okay? That we know. Two, we also know that lockdowns are still on around the globe, encouraging more stimulus from the Fed, which in turn will reduce the productivity in the economy and causes a shortage of goods, which is driving up prices. We have already seen this with things like lumber, okay? Three, we also know that Bitcoin is fully verifiable monetary policy that can't be devalued, okay? Four, we also know that Bitcoin is a threat to the existing power structure and will take this power away from these people, such as the Federal Reserve. Five, we also know that inflation will boost asset prices as people continue to sell their dollars for assets. So stay level-headed, look at the bigger picture, guys, not the day-to-day volatility, all right? So everything's going to be fine. I hope you enjoyed today's video. If you did, please subscribe to the channel and give the video a thumbs up. I do appreciate every single one of you.
Until next time, I'll see you later. Ciao.